Let's talk about a change of scope or engagement type. As we mentioned, there are various types of engagements. There are also varying scopes. For example, an audit, you're going to do much more work. What is scope? It's the amount of work you're going to do. Whereas a preparation engagement, where you're just preparing the financial statements, and again, no, I haven't really gone into depth on the specifics of these engagements. Obviously, we dive into those much more in depth as we go through our course. That's going to be a smaller scope. You do less work, less time, less testing, less exposure to different accounts. So the scope is very important. When auditing, the scope of an engagement may be changed or the type of engagement may be changed. We have an underlying reason for any of these engagements being chosen, whether that's the bank saying, hey, if you want to get a loan from us, we need you to get your financial statements reviewed. Or the SEC says, hey, you're a public company, you need to get an audit done. Or maybe you're a small entity and you just want to make sure that your internal controls are operating properly, so you get an integrated audit. Whatever the reason, there is a reason. Now, as we say here, the scope can be changed or the type of engagement can be changed. It can be due to the original reason for the engagement changing. So let's say the bank says, we want you to get a review of the financial statements. Then maybe they change their mind and they want you to get an audit. Or maybe it's the other way around. They want you to get an audit and then they say, actually, you can just get a review. Now, the purpose of all of this, and why would you not just get an audit? Some of you in the big firms might say, oh, I'll just get an audit, right? All we do is audits. Audits are the most expensive. They're the most time consuming. So getting a review, which is less in scope than an audit, and it covers a lot of the same grounds, roughly, I'm not going to say that, but it's just less in scope. It's just less work because a full-on audit isn't always necessary. Now, the AICPA defines a change in scope, which is the amount of work done, as a change in the planned extent or focus of the audit procedures. Generally speaking, less procedures being done. The AICPA defines a change in the type of engagement as a change in the planned objective or purpose of the audit or engagement. A concern regarding all of this is the consideration of whether or not the reason for the change is a legitimate and acceptable reason. One common situation you may see, and actually, I'm not going to talk about that because we'll see that right here in the bullet points. I like to just go on and talk about everything I've seen and learned, but we're going to see that. So, acceptable reasons: the client was originally requesting the engagement for a bank loan, and now the bank changed the level of assurance from positive to negative assurance. We'll talk about the assurance types. How positive assurance is a little more work. So you need to do less work. You're going to pay for a cheaper engagement type from the independent auditor. Now, here are some unacceptable reasons, and hence the whole reason we're talking about this. Audit procedures that may discover fraud or material misstatement. So maybe management says, hey, we hired you for an audit, but we want to actually change this to a review. Now, you as the auditor, you'll ask them, what's the reason? And if they can't give you a straight answer, you should think, do they maybe not want an audit because an audit is more work? We're going to uncover more items, and we could potentially discover fraud or material misstatements, and they're trying to cover that up. Something to consider. Management does not want the auditor corresponding with third parties for any reason. Maybe they'll discover fraud. And then management refuses to sign a representation letter. This is the letter that details everything management's taking responsibility for, such as all of the financial statements, all of the internal controls. We'll talk about that in a later lesson as well. So again, the whole point of this is if you're going to change, if you're going to select something different from the menu, right? We're using our menu example. Then you got to think, is it a real reason? Is it a legitimate reason for the change? Multiple engagement types. Well, an accountant may perform more than one level of service in an engagement, such as a compilation and a review, or a compilation and an audit. And when this occurs, the accountant should issue the report that is appropriate for the highest level of service rendered. Makes sense, right? You can order two things off the menu. And if you do, you are going to follow the standards of the highest level of service. Compilations, a lot less work than an audit, and a lot less regulations, a lot less rules to follow. So if you're going to do both of these, you're going to follow audit rules. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.